Liabilities are obligations of the company. They are amounts owed to creditors for a past transaction, and they usually have the word payable in their account title. Along with owner's equity, liabilities can be thought of as a source of the company's assets. They can also be thought of as a claim against a company's assets. For example, a company's balance sheet reports assets of $100,000 and accounts payable of $40,000 and owner's equity of $60,000. The source of the company's assets are creditors or suppliers for $40,000 and the owners for $60,000. The creditors or suppliers have a claim against the company's assets, and the owner can claim what remains after the accounts payable have been paid. Examples of liability accounts reported on a company's balance sheet include notes payable, accounts payable, salaries payable, wages payable, interest payable, other accrued expenses payable, income taxes payable, customer deposits, warranty liability, lawsuits payable, unearned revenues, bonds payable. Liability accounts will normally have credit balances. If you like this video, then please hit the subscribe button and also press bell icon for future updates of my channel. And also don't forget to like and share. See you in next video. Take care and Allah Hafiz.